By day, I'm a mild-mannered accountant, but by night, I'm the she-wolf of Wall Street.
Hi everyone, and welcome back to the Call Girls Investment Club channel. People have asked me to do a how-to on options trading. I'm not going to do that. I'm going to talk about Zoom, the option I most recently invested in, and give you an example. And what I'm going to do is why I invested in it, what I bought, how it works in general, and then talk about the details of options trading, so that over time, as you see the different trades and what's possible, then you'll eventually learn it. That's how most people learn, is repetition. Okay, so what day is this? Okay, so today is Friday, April 24th, 2020, and we're in the middle of the COVID virus lockdown still. I've been investing in Abbott, ABT, and Zoom, ZM, for a while now, because I feel like whether there's ups and downs in the market, I feel like we're in a period now that might have a lot of ups and downs and sideways action. And I wouldn't buy ETF in the market in general right now, because an option you have to have it go up if you're buying a call option, or you lose money. If it just stays the same price, you lose your investment because you're betting on it being higher. So I'm going to talk about Zoom because this is an example of something I traded in the last 24 hours, and I sold it 2 days ago when I thought oil was going to drag the market down, because I've been seeing that coming for a while, and then the news hit about the oil price going negative, so I just didn't want to be in that option anymore. There's a couple of reasons. The option I had expired on the 1st of May. So an expiration date is basically you're betting on a price for a certain day in the future that you think the stock is going to reach at least that price if you buy a call option. So I had a call option that expires May 1st, and that's less than 2 weeks away. And I like to get out of my options before 2 weeks before they expire, because the kind of options I like to buy are usually 30-day options. I did a number of spreadsheets a couple years back, excuse the cat, and I decided that was the easiest and best way to make the most money for me. If you really knew a stock was going to go up in the next week or so, you could make a lot more betting on very short-term options like 1 week, 3 days, but you would have to really know that. Basically, the option I sold, I have to look at it, can't remember what I sold, that was a while ago. Two days ago, it was a long time. This option is May 1st, 2020. It's a $140 call in Zoom, and that means that I was betting on the price by May 1st reaching $140. Well, now obviously it will, because Zoom just announced, I think today, that they're going to be added to the NASDAQ 100, which means when people buy exchange traded funds, or when people buy the NASDAQ, they're always going to buy some shares of Zoom, which means there's hundreds of thousands of investors that are now going to be buying Zoom that didn't specifically buy that company. Now, everybody who buys the NASDAQ is buying a few shares of Zoom. When this happened to Tesla stock a couple of years back, I think it was 5 years now, I made a lot of money when that happened, because the stock just went up and up and up. And I feel like Zoom is kind of comparable to my experience in Tesla. Some of my other videos I might have talked about how I made $1 million a couple times on Tesla because I saw something coming, like when the Model 3 was being released. I feel like Zoom is sort of similar. They got hit with a lot of bad press in the last couple weeks because of people logging into calls who didn't belong, and they considered it hacking, but actually it's just people using Zoom incorrectly because they're new to it. And it kind of reminds me of Facebook also, because Facebook got criticized a lot for, there were a lot of criticisms, and then people thought it would be regulated, and really it didn't affect Facebook at all. The stock went down temporarily, but nobody stopped using Facebook. Some people said, oh, we're quitting Facebook, but it really didn't see that much of a hit. And Zoom is similar in that not only are people still using it no matter what the news says, Zoom has already become a household word. It's sort of like Kleenex, the brand. That's a brand name, and now we use it to describe an item. So that's really quick that this became a household word like this. I think it's really well managed. I also feel like it's a momentum stock right now. There's so few stocks that people want to buy right now in the COVID virus morass where we're all trying to figure out when this is going to end and what the future is going to look like. Zoom seems to be something that'll always be here now. It might lighten up a little when if people all rushed back to work, but that's not going to happen. I think it's going to be a gradual return to work, and I just think they would continue to have a lot of business. And so I feel like the stock is a momentum stock now because people see it's like a self-fulfilling prophecy. People see that Zoom is going up when everything else is going down, and where are they going to put their money? There's not that many stocks that people can confidently invest in right now. I've got Abbott. I decided to go with Tesla. Their earnings report is next week, Wednesday, and I almost bought FedEx. Shopify is another one that I really liked. And then there's, Amazon and Netflix, but Netflix reported and blew everything away and their stock went down. So I'm waiting for that to stop going down before I get into Netflix. I don't know, FedEx, I'm kind of liking that based on other people's recommendations, but I'm not really a user of FedEx that much, so I don't usually buy stocks that I'm not a user of, so I put it on the back burner. I feel like the entire stock market has an upward pressure because of the money printing that's going on, all the money that's being thrown at this. It's going to inflate the price of the stocks, and I also have gold because of the same thing. So let's see what I said about Zoom this morning because I'm tired. By the way, my son told me there's an insult that people use against older people like me. They call them boomers. So they'll be like, okay, boomer, and that's an insult. And he said if anyone that says that to me, I should say back, okay, Zoomer. Now that Zoom's becoming a household word, I'm thinking I'll just say, hey, I'm a Zoomer. Not that I'm using it right now. I have nobody I want to talk to right now. I just want to hide in my apartment. So I'm looking here. I had Zoom expiring May 1st. I bet on $140 for a strike price. And now it's at $175. But when I had this way back, it was the price it was trading at. So I sold that. You can see where I sold it at $16.50. That's a per share price. They'll say a certain number of contracts in your account. And a contract is 100 shares. So if it said one at $16.50, you're not going to pay $16.50 for that. You're going to pay, $1,650 for that. So then I bought the next day after that big oil crash. I should have bought the same day probably, but I didn't think it would last that short of a period. I bought Zoom 145 strike price because that's the price it was trading at when I bought it. I usually buy around that price because they're more heavily traded, so they're more liquid. They're more easy to unload if you want to sell them, if you're really short on cash and you think something's really going to go up, you could buy a higher strike price and make more money because you can buy more of it because it's cheaper, but I don't feel that aggressive like I used to be with Tesla. I'm trying to be more conservative. So this is Zoom, June 19th, 2020, a 145 strike price. I got it for $21.50. So here's what happened. I got that like yesterday or the day before, and I decided to put in, I do sort of, sometimes trading gets crazy and you can't even get in there to buy or sell. So I thought, I'll just always put in a sale price, double what I bought it for. If I double my money, and then if I decide I still want to be in it, I can buy into a later expiration date or a higher strike price. If a stock goes up that much, I don't want to be in these low numbers like 145. If it goes up to 175, I'd rather buy something that's up at that strike price because it'll be more heavily traded, so it'll be more liquid, easier to sell, easier to find out the current price, because if people aren't trading this 145 call anymore, they're not going to list the current price on my websites that I flip over to real quick on my phone, So I put in this double the purchase price order, and I woke up this morning, I looked, and it was up a lot, but I didn't think about it that much, but I actually doubled my money in one day, so it sold. So I looked again, I was just checking, what orders I had that were pending, and that one had executed. I had 0 shares of Zoom, so I thought, okay, great, I'll buy back in because of this thing where they're going on the NASDAQ, and that is going to be like a long-term upward pressure for a while. So I bought back in, and here's where I bought back in. This is the same date because, it's still, this is way in the future. This is really conservative. June 19th. For me, it's conservative. I used to buy 2-week options, but you lose so much money in those last 2 weeks. I'm trying to keep it to 30 days. But this is it's more like 60 days because this is such I feel insecure in these times of the virus, so I like being really conservative. So I bought a 60-day in the future option, and it's a June 19th 175 call. Well, that's because it's trading at 175 now. So I got it for $29.40. Now I have a new order in here. That's what this is down here. So this order is, if it goes up about double, $58. I kind of rounded it down a little. So if it doubles again, it could double again in a day, it could double again in a week, a month, 60 days. So here's how it works. Okay, this June 19th, $145 call. When I bought this, the stock was trading for like $150. So you should have $5 in there where your option's worth at least $5. That's called the intrinsic value. So the extra that I'm paying, the $21.50, is more than the $5 it's worth. That's the extrinsic value. That's the value of my right to make this bet with whoever's making this available to me. So when the stock went up $20 in one day, my intrinsic value went from $5 to $25. So all of a sudden, it should be at least $25 worth. Well, I got $43. That's because that extra amount above $25, what is that, $18? That's like the right to gamble with them. It's a little more now because suddenly this stock is skyrocketing fast, and whoever's making these bets, this is able to charge more to the people who are all scrambling to buy these options. So that's the higher price. So then when I bought back in here, it might have been trading at 180 at the time I bought this. So that's a lot of extrinsic value. That's a lot of price to pay for the right to gamble. But now everybody's hyped about this stock, and $29.40, I'll break even if it goes to 205, 204.40. But that's pretty likely, and this is a 60-day in the future bet, so there's always going to be some extrinsic value for the next 30 days at least. So let's say it gets close, I can make money. The faster it goes up, the easier I can make money. But if this went all the way to June 19th and the price never changed, it was still 175, this would be worthless. This would be worth nothing to me, because this would have a value of intrinsic value of 0. It's basically, this is a right to buy something at 175. Well, if the stock is already trading at 175, everybody has the right to buy that for free. So why would someone pay for this, anything for this, not even a penny? It wouldn't be worth it. So thanks for watching, and I hope you guys have a little more hope now that you see you can actually make an investment that doubles your money in this market. I was feeling a little depressed because I was feeling like I couldn't see what the future held. But now I'm starting to see it. I'm starting to see two classes of people. The class of people who think they have immunity to this virus. I don't know if they do, who have had it already. That's like 15% of the people out there running around having a good time, and the rest of us sitting in here afraid to death to catch it. So good luck. See you next time.